Welcome to the Market Huddle with Patrick the Content Machine Serezna and Kevin the Macro Tourist Muir. So grab a drink, get comfortable, and get ready for a deep dive into the markets. Take it away, guys.
It's Friday, September the 13th of 2019. I'm Patrick Serezna.
And I'm Kevin Muir. Thanks for joining us this week. Today we are joined by Scott Murray, author of the Volatility Analytics newsletter, where he shares his views on seasonal trades in the bond market, SPX option expiration tendencies, and an Amazon Prime Day trade setup. Then we are pleased to have an old friend of the show, Market Huddle beer drinking record holder Tony Greer, join us for his first installment of his new monthly appearance when he talks precious metals, home builders, and Bitcoin. For our WTF segment, Draghi goes transcendental in his latest ECB meeting.
All right, and in this week's trading history, we're going to go back to the sale of Pebble Beach, and then we're going to go and look at the top 5 things to watch next week. Now, before we jump into the show, I just quick housekeeping thing. Those of you that are in the Toronto vicinity and can make it out next week for the All-Star and Options, it's running on the September 20th and 21st. I'm speaking at the events, doing all sorts of shows on commodity and gold cycles. So hopefully it's free to attend. Hopefully we'll see all of you out there. But Kev, the big thing, of course, is that Tracy Shukart, Chai Girl on Twitter, is also going to be at the event. And she's speaking at the show. And we'll be meeting up with her at the Rec Room for a Market Huddle meetup. And we've done now 2 Market Huddle meetups up until now, one in Chicago and one in Toronto already. And we're going to do another one here in Toronto at the Rec Room. And it's a great time, isn't it, meeting all of our listeners?
For sure. And not only that, more important than meeting myself for you, which is not that big a deal, but they get to meet Tracy.
Yes.
Yeah, that's right. So you can come and quiz her about oil.
Network. It's a great networking opportunity with
right.
other Market Huddle listeners, and just a great time. And, don't worry about if you feel like you don't have the trading knowledge or something like that. Everybody is welcome. Just come and stop by and say hello. We're going to be there starting 7 p.m. Actually, we're doing a 5:30 p.m. pre-drink over at the Money Show at our booth. They're going to be serving drinks there, and so at our little booth there, we're going to have drinks and start there, and then we're going to end up at the Rec Room at 7. Everyone that can make it, please do come out. All right, so that's Lena, why don't you jump on here, and let's have a quick talk about our sponsor this week.
Sure. Our sponsor this week is Lawson's Finest Liquid Sip of Sunshine India Pale Ale.
Nice.
It's a nice yellow can. I like
and more importantly, this is a sponsor that I snagged from when I was down in New York. I went looking for a couple of sponsors out there. So this is from Stratford, Connecticut. And so a thank you to Lawson's for sponsoring us. And but what's crazy about this is an 8%. Like this is a kick in the teeth. We're going to start slurring by the end of the show, right?
Yeah, maybe.
Oh, never mind. End of the show. You'll be slurring by WTF.
That's right. Okay, let's get to it.
All right, Lena, any other comments on it, or is this it? We're ready to go?
I'll read a little bit of it.
Okay, go for it.
Our lupulin-laden India Pale Ale is packed with juicy tropical fruit character, bright floral aromas, and delectable layers of hop flavor. Pour mindfully, inhale deeply, and enjoy a tropical vacation in a glass.
Well, that actually does a pretty good job describing it. I just took a sip here. You know what? It's not bad. I mean, it doesn't taste like an 8%er. Do you taste that,
Patrick? I knew you'd like it because it's vaguely reminiscent of a sour.
Oh, come on.
It is. It's got listen, anytime you got too much fruit, it's just bad news. And this is, well, anyways, we'll save it for the end. Stick around for the full kind of review afterwards. Lena, what do you think of your first sip?
I agree. I thought this was more of a Patrick beer.
Exactly. That's Lena, you summed it up great.
Okay.
Let me do my legal stuff.
Yeah, yes.
Clients and employees of East West Investment Management may hold positions in securities mentioned in this podcast. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. For more information, please visit eastwestfunds.com. Side effects of too much market huddle may include cow eyes, beer pox, and or phantom rash. Please visit your doctor if the symptoms persist.
All right. All right, let's move on.
Okay, at this point, we're pleased to have Scott Murray, author of the Volatility Analytics newsletter, join us to talk about, VIX, the stock market, and maybe even the bond market a little. And I think he's brought us some charts on this particular stock that's piqued his interest. It's a pleasure having you today, Scott. Welcome to the Market Huddle.
Oh, thanks for having me. I appreciate it.
So let's just jump right into it. I love your letter. You're a kind of a S&P/VIX trader, and for those who don't know, he's actually on Twitter at the Volatility Whiz. Just quickly, what's your background? Like, where did you come about trading volatility in the S&P so much?
Well, I started trading during the financial crisis, and it all sort of started because coming out of grad school, there were no jobs. So I sat in front of a terminal all day and sort of learned it on the fly. Volatility is basically, I don't trade like volatility ETNs or anything like that. It's primarily in the indices, and I sort of like look at, what events are on the horizon, whether it be a Fed meeting or trying to trade talks and try to find like good pricing by pairing up options on the volatility surface. So I would say that's probably like 90% of what I do is pairing up options on the surface.
Right.
That sounds great. So you got some charts for us. Why don't we jump into the first one, which looks near and dear to my heart, which is the TLT. What are you thinking there?
Well, I drew this black line here because like over the last 5 years, like people don't, everyone was talking in August about, oh, what's the Fed think about, is this a signal for the economy? And essentially every year, right, the last 5, the long end of the curve has basically topped around, the end of August. So it's like, it should have been more obvious to people that this was just like sort of a seasonal trade. And, the volatility in TLT, over the last like 10 days is like 16 versus like the S&P is 10. So it's almost like trading, it's trading at a much higher vol than just the regular index, And the reason why SPX vol is low right now is obviously, we're coming towards a quarterly expiration, but I'm always like on the lookout for volatility, wherever I can find it.
Right. So the TLT has been often one of my favorites. Like I've long argued that we're going to get a rise in fixed income volatility, and especially relative to stock market volatility. I just never expected it to be on the upside so violent. And the move to in August in the government bond indexes, it was unprecedented. I think it was one of the biggest moves that we've had since the great financial crisis. And it seemed to me that it was just a kind of a low volume, just get me in with no liquidity. Is that what you kind of saw in terms of the volatility?
Well, I mean, when you see a move like this, like you see it in a lot of markets these days, whether it be oil or even in, the indices, like at the end of last year, it sort of feels like there are derivative positions out there. Like there's a lot of gamma that sort of drives, hedging and rebalancing that sort of causes it. So, I mean, once it gets like sort of like out of a range, like people have to sort of chase just to stay flat. And that's what that sort of felt like to me. I mean, I don't have any evidence to support that. I mean, that's just what it looks like, and it looks like it's reversing that exactly how it occurred like during August.
Right.
I was out with some pension fund managers the other day, and they were trying to argue to me that it was much of the move in August was actually mortgage-backed related, and they're short gamma, right? The mortgages, because of the negative convexity of their portfolios, and they were arguing that that was the majority of the move. So, regardless of what it was, it sure was painful for us that we're trying to fade it. But now that we've got some moves the other way, it's finally eking slowly back on side. It is interesting to see this seasonality, and I didn't realize how prevalent this kind of late summer, early September topping formation is, and it's a great chart that you brought out. One of the things is I kind of mentioned you in the last huddle was because wasn't it you that said, I don't know why everyone takes off the last 2 weeks of August?
Well, I said that too. Yeah, I did. I did mention that. I have a little saying that when people are on vacation, you better be working. So,
Man, that's a lesson that I've got to learn, because I always take off the last 2 weeks of August, and every time I'm like, I never get a vacation because I'm like, I have to get online, and I'm like trading because the market just doesn't give me a chance, right? It's insane.
Right.
I think I'm going to move my vacations to July and just be trading full throttle in August, right?
Right.
Okay, so let's go to the next.
Hey, Christmas is absolutely, Christmas to New Year's is a great time to be trading. I'll tell you, I never ever take that off. There's always like money on the table.
Really?
There you go.
Really?
Okay, so let's go on to your next chart, which is I think you brought it up.
And just
the
real
S&P.
Real quick.
Yeah. So yeah.
Can I just mention something real quick about that?
Yeah.
If you had in the long bond, right, futures. If you had bought, like, say, a 160, a ZB 160 put, like a week ago, you could have got it for like 5/64, and now it's like 2 and 32, which is like, I don't know, 3,500% return. So, I mean, even though it's volatile, like something that markets that are more volatile still offer like value buying volatility in gamma. It's amazing. So. Like, I just figured I would throw that out there in case people are wondering, when you see this, how do you take advantage of it?
Right.
For sure. And, I was just amazed at how one-sided it was and how people were just giving away the puts because they just could never imagine this going any way but up. And it's those kind of environments where options are actually the most valuable because it's difficult to stay with the short, but if you're long premium, even though it might be expensive premium, it's still worth it because the realized ends up being even more, even higher than what you're paying for the implieds.
Yeah, it's extraordinary that we just
gamma's been cheap.
Yeah, it's extraordinary that the TLT just wiped $5 in 2 days, right? That's quite the pullback.
That's right. It's a big move.
Trading
now,
like
this is the opposite.
Trading like an IPO.
Yeah.
Right. Now, the opposite is happening in the S&P, though, right? And you have a theory on as to why that is. Why don't you walk us through what's happening in the S&P?
So, yeah, I mean, this is something that I always watch. Like the options expiration cycle to me is probably the most, to me, is probably one of the most important drivers of the market. And like through like July, I can't remember, the exact number. I think 55% of the return in the S&P came during like the 7 OPEX weeks year to date. So, that's where the returns, the upside is happening. And especially at the end of quarter, it tends to be even more exaggerated because you have huge option positions open right at the end of the quarter. So if you look at the chart, you could see like in March, right, the third week in March, the third week in June, and then here we are, the third week in September is coming up, and you're just getting these massive rallies that occur then. On top of that, it tends to, as you can see the arrows, after you get past these expirations, then volatility seems to reemerge. So, this chart just basically, it speaks for itself. The options expiration cycle is like, if you don't know, if you're not aware of it and you're trading like premium long or short, then you're probably, you're going to get hurt.
Right, and it grinds higher the week of option expiration. Is that what you're basically seeing? And therefore, and do you have a theory as to why that is? Like, what's your thinking?
Well, there are a lot of structured products out there selling like premium, and the market tends to, as long as the dealers have positive gamma, it tends to gravitate to the upper strikes. If they're short gamma, then the market's more volatile. So if you have to keep that in mind. So in the case of, there being like huge open interest at like 3,000 and 3050 S&P, the market just wanted to go to those. And then, these structured condor sellers or volatility sellers, they roll them out, and that forces the corresponding market maker to like add more futures, which is sort of a prop to it. So it's a function of structured product, search for yield, and the corresponding market making hedging activity.
Right, and I read in your this week's note that you wrote, your volatility newsletter. I saw that you had mentioned that both Charlie and I could never pronounce the JP Morgan guy's name. Patrick, why don't you help me out here? What's his name?
Marko Kolanovic.
Oh, yeah, there you go. There you go. You're stumbling on it worse than me. I see that they've actually made careers out of focusing on this, dealer gamma positioning, haven't they?
Yeah, well, at least, I didn't really know them very well until like the last year, but like this sort of like market behavior is getting more and more exacerbated. I mean, it was sort of responsible, for a lot of what happened last fall. And just because, I think Ben Eifert I was watching a Real Vision interview, and they were really going over how, say, Asian retail demand for structured products is so big that the indices are just being flooded with premium sellers, in different forms. There was actually like an article in the journal about people suing UBS for their Iron Condor selling strategy program, which has basically wiped out a ton of capital since like last August or whatnot. And that's what happens when you have moves that are like straight down and then straight up like we had. So, at some point, there's just too much, and the indices can't handle it.
Right.
We're
now,
not
so
there
how
yet
do you?
in the S&P, but
Right. So what do you look for in trades to take advantage of this kind of phenomenon?
well, the easiest sort of setup, right, would be looking 2 weeks. If the market has fallen 2 weeks before expiration, then you start looking to the long side, right? I mean, how do you do it? I mean, there's a million ways to do it, and you can just buy calls. I mean, in a lot of cases that works, but and you could sell, bear puts, bull put spreads, or flies. There's also, whatever your preferred method of targeting something 50 to 100 points higher, if that's the magnitude of the drop you got, and that's precisely what we saw, like in August, right?
Right.
Now, one of the trades I saw that you were chatting about recently was this idea about the FOMC and the fact that maybe you can get the spread between the option that expires the week before or a couple of days before is much too low versus this one that trades after. Are those the kind of trades that you're often looking at? Like, is that typical of a trade, your kind of bread and butter trade?
At least someone reads my letter. Wow, that's nice to hear.
No, it's good stuff. I love seeing those kind of things where you're looking at the intricacies of the option market and how it might not be priced. They just put the same volatility on the kind of the 1 week versus the other week without thinking about the events that are occurring there.
Yeah, so I mean, like I mentioned earlier in a wonkier way, like I do look at the surface of vol, which is basically like a saying that I'm looking at, different prices, volatility prices, like over time. So if the Fed meeting has, a higher expectation for movement, maybe I could like sell something, shortly after that and buy something when volatility is expected to be lower, and the difference in price, right, will be small. So I think the trade I put in there was something like 2875 S&P 500 index puts, right? Where it was like cost me like 2.5 index points to put that on. Whereas that spread, right, next Monday and Wednesday, the same spread, like a week earlier, is like worth like $6 or $7. So you get the idea of like, you know, how much risk you're taking, right? 250 versus what you can get, you know, in a very short period of time. That's sort of like my bread and butter trade is, you know, pairing up SPX put options.
Nice.
Right. Okay. So then the next chart you have is, yeah, no, it's actually great. It's I love it. And it's all those kind of trades are interesting and something that those who are a little more technical inclined should definitely check out. Your next chart that you brought with us is the Amazon, the good old Jeff Bezos stock. What are you thinking there? What are you watching?
Well, there's some things that seem to work, like, you know, year after year, and this one is, you know, just like the Apple event. It's a tradable event, right? Because there's going to be volatility in the back, and you could sell some in the front. And in any event, in this trade, basically you could see all the CNET and all those sites were, you know, leaked out when the Prime Day was going to be, right? And if you just took a long there and rode it through Prime Day, you have the cover of earnings right behind it. So people don't really want to sell like before earnings. I mean, you see that in the FANG space all the time, right? They just ride it into earnings. They'll sell after, okay? But no one really wants to be short before it. And on top of that, you have, you know, people that are anticipating, you know, every year that this company is going to do a larger sales number, and they're looking towards that, right? So this if you look really to the left, right, at June and July of the year prior, I mean, it worked then as well. So it's something that this is the kind of thing that I'll like keep a spreadsheet of like trading notes, and I'll say, all right, next June, keep your eye on this, because if there's a dip, then, you know, in May or something that you might want to get long, like think about Prime Day.
Right.
That's a great piece of advice, and something I don't do nearly enough, because there are those trades that seem so obvious and seem so clear, and yet then you kind of, the next year comes around and you're like, why didn't I, you know, do that? And it's the discipline of keeping notes and going back and actually executing that trade that matters. And, you know, I commend you for it. I have a question in terms of, do you think that once this trade stops to work, it'll be the end of the bull market? Like, is it like what I worry about with this is that it'll work until I do it?
Yeah, I would say, you know what? I was sort of thinking about that today. With this trade, I was thinking that if this doesn't work, then something's really wrong, because that means that people are scared about their earnings prospects, right? For Amazon. And if Amazon is going to have, you know, a poor earnings report, that's basically goes right to the heart of the American consumer, right?
Yeah.
Right. Okay, well, listen, thank you so much for joining us. Why don't you tell us a little bit where the people can find you? I know you're on Twitter, and you also have a website and a letter that I highly recommend. Why don't you go ahead and tell people where they can find you?
Well, basically, I'm just on Twitter.
So the Twitter handle is @VolatilityWiz, and you're active, and I highly recommend people that to go out and check you out. Well, thank you very much for joining us, Scott. And for those who want to hear more about Scott, and we're going to talk a little bit of hockey because he is from Boston in the after hours. Make sure you stick around. Okay, it's time for our second segment, and we have a special announcement to make. We were lucky enough to get Harris Kupperman to agree to come on the show every month. That's the last Friday of every month. And we kind of chastise our good friend Tony Greer, and we're proud to say that he's agreed to be on the Market Huddle every second Friday. So we're going to get the Navigator launch with the editor of the Morning Navigator, Tony Greer. Thanks for joining us today, Tony.
Hey, man. Thanks so much for having me on the show. I'm excited about it.
Yeah, and you were especially kind. We're taping this a little early because you're getting to go to a special concert tonight. What are you going to see? Who are you going to see?
Yeah, we're gonna go see a throwback show tonight, man. Peter Frampton at Madison Square Garden. It's his farewell tour, so it should be fun.
You know what's funny? You told me it was his farewell tour, and I actually believe this one will be because you told me that he's actually suffering from some sort of kind of muscular degenerative disease. But I remember going to the farewell tour of The Who.
Yeah.
In 1988 or whatever.
Yep, exactly. I was at a Stones farewell tour in the 90s. You know what I mean? Like, you can't ever count these rockers out.
Absolutely. Tony, you got a beer this
when they run out of money.
Yeah. I'm going just back to the old standard, Patrick. I'm not going to crack it right now. I've got a freezing cold Bud Light out of the cooler.
Okay.
And I'm just going with something light because it's only 2:11 in the afternoon and I got a long night ahead of me.
Well, listen, you know what? We're drinking this Sip of Sunshine. It's one of these beers from actually your neck of the woods. And it's an 8%, so there's no way me and Kev are going to keep up with you can for can because we're going to get plastered at an 8% beer there. Anyway, so Tony, you put together some charts. What's on your mind, buddy?
Well, I'm a raging precious metals bull for now, which has really been the top trade on my mind as we kind of went through August with that negative yielding rate vortex that was sucking up everything in its path. And so gold was a good trade. And then if you've been reading my note, I managed to catch the turn fairly well in precious metals and in interest rates when I wrote about it in Hairpin Turn. And so I made a sale in gold and a sale in silver, but I've still got a large position in the bulk of my length. And I think these are going to be heavily in play. Obviously, I don't think that this negative yielding rate vortex thing is going away all of a sudden. We're having a pretty big bounce in yields here globally. But I think that they are a series of sort of sell the fact events that this bond market has been waiting for.
Right.
And sort of rallying into for the whole month of August. We got the U.S. PMI finally slips into manufacturing contraction, and the bond market stopped rallying, right? And so that was one signal that it may have gone as far as it can go. And then you had, Draghi come out with his swan song yesterday, and that was just as entertaining as could be. Literally breaking out a new set of QE, new set of bond purchases, et cetera, et cetera. And, that to me, that's another signal that I don't own enough precious metals. So I'm very much embracing this little dip that we see on the screen and trying to strategize as to how to buy more and when to buy more.
Right. So, Tony, is there a particular price level on gold that you're watching, some moving averages or some level that you think is kind of a key area where you think there could be the buy?
Yeah, I mean, I've got chips stacked up in sort of pyramid. I'm going to buy all three moving averages if it trades all three. I'll tell you that. So I'm the kind of guy that's going to buy like a one lot at 1471, a three lot at the 100-day moving average at 1405, and a 25 lot down at 1350.
Wow.
At the 200-day moving average. So I'm kind of, I'm looking to participate a little bit here, but I'm looking to lean into this thing if we back off to 1350 or 1400.
Well, Tony,
but last time
the last time you were with us, you were at our show when we were at the Toronto Stock Exchange and taping there, and you came out huge bull on gold, and it was a terrific call, and looks like you kind of caught the top again. Out of your length, you said that you made some sales. Like, what percentage of the kind of are you 75%, or are you down to 50 or even less?
I wish I had sold more as usual, but I'm literally at about 80 to 85% of what I consider of the original position that I started with. Now, if we do back off to 1350, that position will be bigger than it started, but I'm looking to replace what I sold to start. I want to do that because I want to have my whole position on, but I do want to get a little bit bigger here as we, the market is going the other way right now with yields rising, but I still think that this negative yield story is going to be with us, and I think that we're going to be grappling with it for, some time to come, and it's not going to be a flash in the pan this time.
So this rally was led by silver, and recently silver has kind of led the correction as well, I would say. So what are your thinking on that metal?
Yeah, I think it's a great, the tell in silver has been the gold silver ratio. If you guys have been watching that, silver with gold silver ratio trending up to about 94, all of a sudden silver jumped out of bed, right? And so from doing some forensic forensic investigating in the markets and having a couple conversations, I think I've learned that it seems like somebody needed to put on a major position in allocation to precious metals and looked at the gold silver ratio and said, you know what, silver's much cheaper here, so I'm going to start with silver. And it looks like somebody, obviously laid into silver pretty firmly from, what did it break out from 16, low 16s or so? Yeah, exactly. Yeah. Broke out really from 16 straight up to a high of nearly $20. Yeah. And now we're pulling back. We didn't even reach the moving averages yet. This thing can back off to $17 and it still feels like it's a buy. Back off to $16 and I still think it's a buy. I mean, to me, these breakouts are real. Gold just broke too long of a channel that it's been sitting in, a 3-year channel, that when you break that, I really don't think it's just going to be broken for 3 months or so. I think that this price is going to continue higher. And, you got to wait for people to throw in the towel on them. You got to wait for people the last guys in have got to throw in the towel. And that's when we'll know it's right to get back in on the long side.
Right.
Okay. So go ahead, Patrick, you go ahead.
No, I was just going to say, you also were talking home builders earlier. What was on your mind there?
Yeah, well, the home builders is like a really sexy setup for me. I can see you just put the chart up there. So if I was to illustrate, to go over this chart, in red, we've got 30-year yields, U.S. Treasury yields inverted, right? So they're upside down. And I'm charting those because a lot of mortgages are based in the 30-year or long-dated paper, or at least, beyond 10-year paper. So I'm using 30-year as my gauge here. And I've got the home builders lined up against it. And you can see there's some definite correlated behavior there. And I feel like what I'm seeing right now is, if I take a step, maybe 5 steps back, actually, and cover one eye, looking at that builder chart, you see this massive head and shoulders. And as yields nosedive to these new low levels, to new historic lows in the 30-year, builders have really perked up. And now that they've broken out of the neckline of this inverted head and shoulders pattern, it's like I won't be able to live with myself if this pattern works out and I'm not long. So I'm long the builders now. It's one of the most recent trades that I put on in my note. It's working out well. I got in just on the break above 42.5 or so. And we're off to an okay start.
Are you trading the ITB?
No, I think he's
trading XHB. Yes, XHB.
Okay.
Yeah, I like it because I like the heavy weight of Lowe's and Home Depot in there. Those are two stocks that I can always be comfortable being long because I find myself in the stores all the time. And as long as the charts are sort of alive and kicking and up to the right, I'm okay being long Home Depot and Lowe's.
So Tony, I gotta say, me and Kevin, going almost 9 months back, made a bet on this show, home builders against Treasury bonds, the TLT against the home builders, and we were neck and neck. I think a couple weeks ago we were. I think very close to break even on in terms of both of them being up about 20+%. Who do you think is going to win the bet here by year end?
Oh, I don't want to say, man. I'm not sure.
Come on, stick your neck out. You're going to be in
I'm long builders. I'm long builders. So all right, Kev, builders.
There it is. You got another counterparty in you. Listen, I'm not bearish home builder. I just think that. Anyway, whatever. Yeah. It's not what I wanted to hear, but anyway.
That's all right.
Anyway,
what else we got,
well, listen, you shared this Bitcoin chart here.
Oh yeah, that's just another one to take a look at. I mean, Bitcoin is coiling up so nicely here. I draw that breakout with the yellow sort of, the yellow cup and then the handle breakout type of thing, so you can see it really clearly there. And then now, it's the same thing as gold. I believe in this breakout after that huge consolidation in 2018 into 2019. Bitcoin definitely got left for dead back there. I got my readers into it pretty early. In fact, around 5K as it just started breaking out. I've still got a pretty upsized position there, and I'm really just kind of waiting out this consolidation at around 10K right now. Yeah. What was cool to me is that I managed to convert a bear into a bull when we pulled Jared Dillian over to the bull camp in Bitcoin.
Come on, really?
He brought.
I saw his tweet. I just saw his tweet. He was promoting the fact that he's come to the dark side there.
Oh my goodness! Yeah. Next thing we know, he's going to be giving up electronic dance music and going into acoustic folk rock with us, Tony.
Exactly. Next thing you know, he's going to buy a freaking acoustic guitar. That's amazing. Oh my God. No, but it's good to have him because he brings a very different perspective. And he's a very new bull. So he's, sort of cautious about wading in, but he's got to state his case, and, I think that he sees, the need for a non-manipulated currency. Or the fact that the market is going to have a non-manipulated by central banks currency, and we're going to have our cake and eat it too with Bitcoin, and the fact that there's so much intellectual capital flying towards the space that you really can't ignore it any further. So whether the price goes up or not, or whether it doubles or triples or it doesn't go anywhere from here, this phenomenon is going to be with us, and we're going to be trading it on institutional trading desks for years to come.
So Tony, for our listeners, like when you are going along Bitcoin, which way do you put it? Do you buy actual Bitcoins? Or are you playing it through the futures or?
Yeah, no, I'm actually trading it on Coinbase. I don't have put it this way, Patrick, I don't have like a poker size allocation, a poker table size allocation to Bitcoin. I have more like a NFL betting size allocation to Bitcoin, right. So it's a sort of small amount of money nominally, but it came from a much, much smaller allocation, and I'm kind of proud of holding it, through. And, I think that it can be even bigger someday. So I'm just kind of watching for it to make its next move.
Nice.
Okay, so there we go. Long gold, long Bitcoin, and long the builders. And by the way, Patrick, I looked it up. You actually have been losing this bet for a long time. I don't know where you said it was even. I've been kicking your butt for a while. I just pulled it up.
Come on, ITB. On this show, you said that we were even. And so I don't know where
I must have made a mistake because
clearly
I just pulled it up. Because the ITB is up like 40% year to date. And even though bonds are kind of trading like they're a stock and that sort of volatility, but
I'm lagging.
Not,
I need a market crash.
You're lagging.
I need a market crash or something.
You do. And it ain't going to happen in the builders, man. I'm with Tony. People don't realize this, but everyone talks about the boomers. They don't realize that the largest demographic group right now is the millennials. And they, especially in America, they haven't gone and bought a house. They're still living in their parents' basement. And everyone says, oh, they're different. They're different. They're not different. They're just a little bit later. They're going to make households. And now with the fact that these mortgage rates have collapsed, and we've gotten a situation where I saw recently that 80% of mortgages are now in the money for refinancing. It's going to be a huge boom in U.S. housing. It's probably one of the cheapest assets out there. I'm all over Tony's trade. I love it. I don't know about the Bitcoin, though.
No. Well, you know what I'm doing? I'm sprinkling the field on kind of stores of value right now, Kev. You wake up every day to a different horror show, and you say, okay, I can trade the stocks all I want, but if I want something to be here in 10 or 15 or 20 years, I have more confidence in gold and Bitcoin, than any of the stocks that I'm trading right now. So, we'll see how this pans out. But it is exciting. It is an exciting market to at least watch, and I think it's a godsend for those of us in the content business. We get we get another angle to talk about, and it's definitely going to be here and been around. So go ahead.
So Tony, you made some calls on oil with us before. I have the oil chart up here. What's your intuition here? I mean, where are we going? This is coiling up just like if it was Bitcoin. It's just like a big horizontal consolidation. And which way is it going to go? What's your intuition? Where do you think? What's your bias anyway?
I have no idea, but I can't wait for it to break because we're going to make tons of money. I mean, this thing is going to move. This thing is going to move $10, $15 or $20 when it breaks out of here. My bias right now is probably to the downside. And the only thing that changed or even swayed my opinion on that is that Khalid al-Falid just got the royal boot from Saudi Arabia, and they, replaced him with Abdulaziz, which is one of Mohammed bin Salman's cousin, as their oil minister. So he's going to take over the Aramco IPO job now. And, he's the guy that ran their sovereign wealth fund. So it's like, now this whole thing has become a game of financial engineering, and I'm scared of what he might do to the oil price. There's a really serious player change going on over there. And, right now, the most dangerous animal in the jungle is a wounded animal. And Saudi Arabia, to me, seems like the wounded animal at the table. You know, they're still recovering from the Khashoggi thing. They're still trying to get back on track for the Vision 2030 program, which is Mohammed bin Salman's program. And, you know, the Aramco IPO is at the center of that. So if we start seeing a massive pullback in, you know, M&A courtesy of WeWork topping things out or something like that, the Saudis are going to be under even more pressure. You know, if there's a big pullback in private equity and, you know, and the Vision Fund stops spitting out capital, I mean, you know, I can't imagine what they would do to then get the price of oil higher. So what I'm looking to do is kind of sit here on my hands until this thing shows me signs of a real breakout, and then I'll start moving toward it little by little and try to catch this move.
There we go, a true trader waiting for the market to tell him where it's headed before he guesses, you know, or no, it's true, honestly. And I'm not saying that as a slam. I'm actually saying that as a lot of times you don't know. And Tony's, you know, smart enough and kind of confident enough to say I don't know. And when it gives me the signal, I'm going to go with it. Having said that, Tony, the fact that you're leaning short, like you kind of said. You told me something to the effect that I leaned short and then listed all these reasons why it went up, could go up, is indicative to me of what the market is set up as. And I agree with you. You're smart. You're realizing that it could head higher, but the reality is that most people are bearish. But anyways, listen, Tony.
Yep.
Thank you so much for joining us. Now, why don't you tell people where you can find more about your letter if you want to hear this good stuff on a regular basis? Where can they sign up for a trial or you know, kind of contact you?
Yeah, Kev, this is actually a good point to mention this, because as you know, that as a reader, and I thank you, of my morning Navigator newsletter, what I'm starting, and it starts on Monday, September 16th, but somebody can sign on anytime after that. I'm starting a free newsletter in addition to the one that my clients pay for, and that's really going to be a slice of, or a derivative of, the Morning Navigator. So you can find me on the internet at www.tgmacro.com. You can find me on Twitter at @tgmacro. And if you have any interest in getting my free email, the Navigator Daily, which is going to launch at noon on September 16th on Monday, you can just direct message me on Twitter, your email handle, or email me at tony@tgmacro.com and with your email, and I will add you to the free list. So the free list is going to be a sort of one-pager, just a sort of brief look of the sort of 5-pager that I send out every day on the markets.
Well, there you go, folks.
So
make sure
that's
you
where you can find me, man.
Yeah, for sure. Make sure you go get his free, the free daily letter. Because I get the full one and it's well worth the money. So I think you'll find that if the free one's anything like the full one, you'll be wanting more and more and more, and you'll be signing up for the full one in no time. Tony, thank you very much.
That's the idea.
Yeah, thank you very much for joining us. And listen, for those who want more of Tony, stick around. I think he's gonna regale us with another Tales from the Trading Pit. Absolutely, man. Okay. So, Tony, you were a long-time trader on the floor, and you promised to stick around and tell us, one of these stories. Is it actually from the pit again, or is this from your days on the trading desk?
Yeah, this is on the trading desk. This is an FX story, and this came about because I just had lunch with a bunch of my old colleagues from Goldman Sachs, and we were talking about, the good old days, obviously. And so there's one story that goes where a bunch of us are about to walk out the door on a Friday. And it's a Friday during the summertime. And I'm chatting with some of the guys on the desk. There's maybe 3 or 4 of us, which includes the dollar Canada trader. And we're going to just call him Brez for now, right? So all of a sudden, the sales guy starts his hands up. And it's like I said, it's 5:30 in the afternoon on a Friday. The market's closed. We're all about to walk out the door. And he goes, hey, Brez, I need you here. He goes, can you show me a bid on $50 dollar Canada? And so Brez is taken back, but he sees an opportunity here. So he kind of grabs the situation and he says, look, if you're going to sell me $50 Canada, I'll get you a price. If you want to see a bid, you can see one on the screen, right? Don't waste my time. It's 5:30 in the afternoon, 5:30 in the afternoon on Friday. Do not waste my time. So very smartly, the salesperson goes back to the client. It's a quick conversation. He comes back and goes, look, I'll sell you $50 Canada. Will you show me a bid? He goes, of course, I'll show you a bid. So he goes into a broker line. He calls his buddy Richie. He goes, hey, Richie, can you get me a bid somewhere for $50 in Canada? And he goes, yeah, hang on a second. Let me look around. Right. So the last screenshot is like, I remember the price too. It was like 132.50. So he goes, look, it was right around where it is now. Actually, he goes, I'll pay you 132.40 for $50. He goes, you're too kind. You're too kind. He goes, do them at 35. It's fine. He goes, oh, really? You sure? He goes, yeah. He goes, do them at 35. So he calls up, he leans over to the client. He goes, tell the client that he's done at 25, 132 and a quarter. I bought 50. Leans over to the P&L kid. He goes, hey, Billy, can you adjust my P&L up $15,000 today? Thanks very much, guys. Have a nice weekend. Walks out. So it was like the ultimate take a report. He squeezed out an extra 5 points for the broker. He squeezed another 20 pips out of the client. He was like, look, you want liquidity on Friday afternoon? This is what it cost you. And he walked out the door. Everybody made money, and we just had a big laugh about it. It was a little bit expense. At the client's expense. But, this was stuff that was going on everywhere, number one. Yeah. And number two, this was in the mid-'90s. And if you could find somebody to give – like he was the only shop on the street that was showing a bid for 50 Canada at 5:30 on Friday afternoon. That's a pretty big that's a pretty large size order back then. That's $37,000 every 10 points, So yeah. But it was good fun to go over it. And good to remember that when, the days when it was that easy to make money.
Yeah, it sure was. It was back in the good old days. Actually, I'm surprised. Exactly. I'm surprised he only took a dime.
Yeah. Yeah, exactly. Or whatever. He could have probably gotten away with more.
Yeah, that's right. Anyways, thanks for joining. Thanks for sharing that with us, Tony. And thanks again for joining us. So for everyone, remember, Tony is going to be on every month now. It's going to be the second Friday of every month. He's going to join us for the Tony's Navigator morning, kind of special episode, the second guest of it. And for those who, want to get more Tony, make sure you go to his website and you sign up. He's got a new free daily email that he's sending out. Make sure you get in touch with him to get that. And listen, do him a favor and actually go even one step further, because his regular letter is gold. I tell you, Jerry, gold. And there you go.
Thanks again, Tony. Thank you so much.
Thanks, Tony.
You guys are the bomb. Thank you. Have a great weekend, fellas.
You too. Have fun at Frampton, buddy. Okay, Patrick, it's time for your favorite part of the show. It's a This Week in Trading History. What did you dig up for us this week?
All right. Well, it was actually this week in going back almost 30 years was the famous sale of Pebble Beach to a Japanese investor, this Minoru Isutani. And what is amazing, and the reason why it caught my attention, was because it rhymes so much with what we've seen over the last decade with Chinese investors coming into the U.S. and Canada. And so let's quickly review the story. So it was an incredibly high-profile U.S. real estate investment, and it sparked concerns among critics that the Japanese buyers were taking over the entire U.S. economy. So this was in 1989 and 1990 at the peak of the Japanese bubble, right? And what ended up happening was that it became clear that the purchase was one of the worst real estate deals in history, plagued not only by controversy involving Japanese organized crime, all sorts of stuff, but in the end, the property was sold for, I think, something like $800 and something million, and he ended up having to sell it just like a year later for $500 million, so like a $300 million loss.
The seller filled that bid in like a butter tart.
Like a butter tart. That's exactly what I was
Filled
thinking.
them in. He's like, okay, there's a bid. I'm going to hit that, and I'm sold. Yeah, it's one of the dumbest trades ever. How do you lose that much that quickly on like a real estate deal? That's just shocking. It just shows you how bad the trader he was.
But you know what it reminds me of? Okay, now I know there was massive Chinese buying all around North America, and even go across the sea to London and Australia and everywhere.
Recently, you're talking recently that there's
recently there has been, right? But there's one particular story that caught my attention, and that was the sale in Vancouver, Canada, of the Bentall Center in Vancouver. and it was the huge, large office complex in the core of Vancouver, and it was sold to the Anbang Group, which is that insurance holding company that went and purchased it for just over $1 billion. And what was interesting about that is obviously was it the CEO that was subsequently in China charged and sent to jail for 18 years. All of the holdings of Anbang were seized by the Chinese government, and they went to proceed to sell all of this stuff. And so this transaction occurred in 2016 at the peak of that real estate surge of Chinese money coming into North America. And it was again just sold this year, and by the Chinese group there, and it was sold privately to Blackstone Group, and another group that basically did a secret purchase where the price was not revealed.
So I take it you think it was lower?
Oh, totally it was lower. It has to be. Like, it probably was the core reason to hide the price is to preserve the resale value. I mean, they probably got it 50 cents on the dollar, and they would never disclose that because I think that would hurt all the real estate in Vancouver in general, wouldn't you think?
I don't know, Patrick. It just sounds like they say history never repeats, but it certainly rhymes, and it looks like it's the same way in that we all thought that the Chinese were going to come and buy everything, and it ended up being that all the stuff they were buying, and especially in Vancouver, and if this was symptomatic of all the houses that were trading in Shaughnessy and Point Grey, and those ended up being top ticks as well, just as bad as the Japanese guy buying the Pebble Beach, right?
Exactly. And anyway, I thought that was a great little tidbit of history. And again, you're exactly right. It's amazing how history rhymes. And wouldn't it be something? I mean, I don't want to say that is the case, but certainly with the escalation of the trade war and all of this, you have to think that era of Chinese buying is over. It's not that money won't come here, but I just don't think we're going to see anything like that for a long time.
Well, it was over the moment we arrested that executive.
Oh, in Canada. Canada, yes.
It was over.
The Huawei executive.
Huawei executive. We did that on behest of the Americans, and since then we've been punished by the Chinese. And there's no doubt about it that marked. If there was any doubt that we were on the other side of the curve, it was put to rest after that fact, because since then Vancouver has been one way, and that's down. Right.
Anyway, that was this week in history. So now it's time to move on to the WTF clip of the week. Why don't you pitch us in as to what we're about to see?
Well, Patrick, I don't know if all of our international listeners know, but recently Canada called an election. Our Prime Minister said that we will be going to the polls October 21st. For our American listeners, they might be kind of wondering if that's October 21st of this year or next year. Nope, it's that quick. We just have a month of campaigning, and then we're off to vote on the new leader. But one of the interesting things was that when I was doing some work and talking about it with a friend, he talked to me about this thing called the Natural Law Party, which was a real party back in the 90s or maybe the 80s. I'm not sure. The 80s that kind of ran on a little bit of a different platform. And I thought to myself, while I was listening to Draghi do his ECB speech recently and his questions and answers about how the markets, that this isn't a fairy tale and that the negative rates are good for the economy, I thought to myself, oh, this is going to be a great mashup. So I thought to myself, it's time for Draghi to get a little transcendental with his ECB meeting. And let's play the tape.
All right.
Thank you.
Final question goes to Mr. Ewing.
Thank you, Jack Ewing, New York Times. Two questions. One on fiscal policy. You've obviously put a lot of emphasis on that today. Are you maybe sending a message to governments?
What we want to do is create large groups of experts in consciousness, to practice techniques of consciousness, including yogic flying, which everyone in Canada has heard about, and which is the most powerful technique of consciousness.
Thanks. The first question is definitely yes.
A large group like that creates such an influence of positivity and harmony in the field of collective consciousness.
And then a related question. You may be aware of a paper that was published by BlackRock recently. One of the authors was Stanley Fischer, your thesis advisor, which called for central banks to start thinking about putting central bank money directly in the hands of citizens.
That it just dissolves all of the stresses which cause the problems and prevent all of the conventional approaches that the other parties use from actually working. And in fact, this field effect of consciousness is the most solidly validated phenomenon in the history of social science.
And I heard your answer earlier to helicopter money, but if governments don't step up to the plate, isn't that something that the ECB needs to consider? Thank you.
Hello, everyone. I'm an expert in making things disappear. My natural law party will make the problems of the nation disappear, as darkness disappears with the onset of light.
You know, all these innovations in monetary policy need to be looked at and studied and thought over.
National consciousness will be created by a few groups of experts in natural law in the country practicing Maharishi's transcendental meditation, and stress, strain, and problems in national life will be eliminated. Scientific research shows that yogic flying produces increased brain coherence, and harmony is generated throughout society.
These are big changes in the way monetary policy works. And we have not discussed this. They may be part of this strategic review in the future.
So it works. And it really is time for us to apply this knowledge to solve the problems of the country.
We will appoint ministers based on their qualifications.
Kev, you know what? You're an expert on making things disappear when it comes to client money, right? No. No, but that was hilarious.
Yogic flying, which everyone in Canada has heard about. Did you know that, Patrick? Have you heard about the yogic flying? And for those who are listening and not watching this on YouTube, you got to go watch it. These people put themselves in they cross their legs and then they jump up and kind of scoot along, kind of like a toddler might do if he was told to, not uncross his legs and move from one point to another. And who knew that this was increase your brain coherence? So this is, Patrick, this is our problem. We're not doing enough yogic flying.
Clearly, we are not. But you know what was hilarious for me was the fact that when you clearly ripped the clip and you had an order filled in the middle of it, because I'm like listening to this thing. I'm like, the markets are closed. I didn't get filled on any order. I'm like checking my account. Like, what the heck's going on here? And it's like, you nicely squeezed that one in there.
I forgot that my computer picks up the other stuff and not just the window that's in.
Well, hopefully that was a good fill for you. Hopefully.
That's right. I can't remember what it was, but all I know is that it really increased my brain coherence.
There we go. All right, let's move on.
I can't believe Doug Henning, there was a magician, and little did we know that he missed his true calling, which was being a politician. And for those Americans who think that they have nobody to vote for, just be aware that these are the kind of knobs that we have to vote for.
All right, let's move on. All right, okay. Top 5 things to watch next week, but we always start with a review of last week. So number 5, we were talking about nat gas, and boy, did that keep going, right? Like it's been a hot move.
Well.
Like what do you mean? Well. I mean, like, this thing is still at 260, and it's...
No, I agree. The stocks aren't moving as much as I'd hoped.
But it's a matter of time. Do you think it's because a lot of those nat gas stocks are basketed into with energy stocks broadly in the ETFs? Like that there just isn't enough of them trading in isolation?
Yeah, the other thing is though, like, so nat gas has gone from 210 to 260. It looks great because it seems like a big deal, but the reality is that it's still really cheap, and they're not making that much money.
Oh
so
no, like until we're north of 3, it ain't making a huge impact, right?
Like I almost wonder if we're hurting ourselves by having some rise in the commodities, before we get some real consolidation. Anyways, that's another story for another day. But you're right. So far, so good on the nat gas, the outright long. Just be careful because there's a lot of negative carry on owning the commodity outright.
Yeah, and so let's talk healthcare, because clearly they got the memo the moment we published that. And I mean, first it went a little bit down, but it keeps kind of towing a little bit higher the last few days, towing with 92 on the upside of healthcare.
The market huddle curse. Yeah, the market huddle curse did not kick in. No,
it didn't. Not yet, anyway. Yeah, now that we mentioned it a second time, things may shift. But I still, it's worth watching. I don't know if it's not my favorite sector, but it is one that's been dogged and no one's talking about it. I like talking about things that aren't on people's radars yet.
I completely agree, Patrick. That those are often the trades that you all of a sudden you're surprised. I think Don Cox had a line that he said, you want to go and invest in things that are on page 20 on their way to being to page 1.
Right.
And I think that's a great example.
Yeah. And so number 3, we were talking ECB, and I know you you made the video, so you have the most to say about this. So please start us off here.
So I thought it was a very interesting and maybe even dramatic and market-moving speech that we will look back and say this was the start. I've never seen a central banker be so clear that the ball is back in the politicians' court, that they have to do fiscal. I actually was quite impressed with how Draghi maneuvered that, how, when he doesn't have to have, when he knows that there's no unanimous consensus, he doesn't have a vote. This guy's actually very shrewd. I think that and I'm actually encouraged by the fact that he was so blunt about his need for fiscal.
Could that have also just been the fact that he's on his way out and he just wanted to?
I actually don't believe that, because let's face it, although he mouthed words about that they're not out of ammunition and that the ECB still has the ability to do stuff, in his heart of hearts, he's got to believe that there's not a chance that he thinks he's actually going to affect this. I saw the Deutsche Bank CEO say something to the effect that my customers, what's to think that if we move from -50 to -60 or -70, that they're going to be any more inclined to take out loans? And the reality is that they're not. Monetary policy has reached its end, especially in Europe. And they have to stop, and the quicker and the sooner they realize that, the better off they're going to be. I promise not to rant today, but I must say...
But you are.
I know I am not ranting, but I must say I was impressed with Draghi. I think it was all positive. I like the fact that he said it outright, that yes, fiscal is what's needed from here. The reality is I don't know why these politicians have so much trouble saying they're impotent. It's like, I guess like a guy doesn't want to admit he's got a problem, but they're there reaches a point where you're just like, let's just watch Netflix and cuddle. Like that's the point that the ECB is at, and I don't see why they can't just admit that.
I bet you Lena's dying listening to this right now.
Okay, number 2, retail sales and CPI.
Okay, so retail sales come in pretty at least higher than expected. I wouldn't call 0.4 hot, but it certainly came in higher than the expectation. And even the core inflation, even though inflation didn't seem to do anything, but core inflation came a tick higher than expected. So it's not like they were disappointing numbers.
So, Patrick, I can't remember what I said last week, but I think if I had to guess, that I would said that I expected it to be hotter rather than softer.
I think so. I think you did.
And that's my theme for this week. Anyways, you'll see that if you go and pull up the Citibank Economic Surprise Index, that really the economy is greatly exceeding expectations. And to me, that's been an easy call because expectations for the economy were so down and out, and so they expected so little from the economy. All you needed was the world not to end, and you'll find situations where it kind of we get surprises the other way. And that's how I look at these numbers. And the carnage in the bond market, we can talk about that in the top 5 for next week, but it's not that much of a surprise to me. Anyways, number 1,
pound
bottom
sterling,
in British pound.
And you have been looking like a rock star on this. You know what? We have that bet going, 115 or 129, and boy, do you look like you've got an edge on me here.
Yeah, I love the pound. I still continue to love the pound.
Oh, you love the pound?
You love the pound? I love to. I did another podcast, and it was from. I cheated on you, Patrick, and I went and did someone else's podcast, and it was a British kind of duo that interviewed me, and they seemed so bearish on their country, and they seemed so down and out, and they seemed like they were just so fed up of hearing about Brexit and stuff like that. And I said to them, I completely agree with you. I understand where you're coming from, but it seems to me that the worst has already been priced in. I would say, absent of a complete and utter hard Brexit, it has to be the absolute worst. Otherwise, this thing is going to grind higher. That's my bet. I just think that I think down there at 120, that even a hard Brexit was going to be, maybe 115, and at which point then you buy it. I just think that it's cheap and it's going to head higher, and I continue to believe that.
You know why I was happy you chose the 129? Because I don't think we're going there. Listen, can we see 126, 127? Can we see 200 pips from here? I think at this moment, the momentum has been set in. You know what? I'll be happy to pay the bet if we see 129, because I don't think it's going to happen. I'll take the other side. I'll continue to take the other side of this.
Of course, I'm not letting you off, buddy. We're going to keep going. Okay, so let's go. Right. Top 5 things to watch next week. Let's see what we got going.
So number 5, I wanted to talk about these rare earths. We haven't talked rare earths, and it's actually not on anyone's radar. Have you heard anyone talk about rare earth at all?
No, it's been a long time.
Although
I do remember somebody telling me, saying the problem with rare earths is that they're not so rare. What's the symbol for this ETF? What am I looking at?
This is REMX, and so this is the rare earth metals ETF. Obviously, it's been a really tough year, right? Like it's that the cheap stuff getting cheaper, and more expensive stuff getting more expensive, right? And this thing at the start of the year, actually going back to last year, in November, it was as high as $20, and it hit a low of about $12 in August.
So, Patrick, is this is because of all the this goes into like electric cars and stuff? Am I correct?
Oh, I think this is I'm pretty sure this is a very broad rare earth ETF. So, like, I'm sure some of the rare earths that are in this ETF are of the stocks in there are making electric cars components and other stuff. But this particular one, I think, is just an all-encompassing basket of all the stocks that make or produce, or that mine rare earths. But then the point I want to talk about is we hit some sort of a low, and at least we're getting some form of a bullish reaction. And not, I don't want to misconstrue it. I wouldn't call this a bull trend. It's simply, it was incredibly oversold, and it did a pretty good run of a couple bucks in a week and a half. And what I wanted to just do is bring it to everyone's attention and say, is this as low as this thing is going to go? I mean, is this where we establish a bottoming formation? Will we find that, over the next 3-4 months, this stabilizes and becomes a buying opportunity? Anyway, I wanted to talk about it.
Yeah, I have no opinion.
Because you haven't been watching it.
I haven't been watching it.
Nobody's watching it. This is what I find fascinating about it.
Well, there you go. Because it's been such a dog. Now the question is, Patrick, it's very unlike you to be picking like dogs like this that are down and out and finally getting a little
I haven't
life to
bought
them.
any yet, so
You're just watching it. Hey, listen, that's what this is for. Top 5 things to watch. You watch the rare earths, and then you watch it most likely sag back into new lows. That's what I think.
All right. Well, that's good to know that's your opinion. Number 4, Kev.
Yeah.
Oh, you have a
I was gonna
comment?
say, well, I was going to say that my opinion in a Subway token might get you home at night. Okay, number 4, the turn
Number
in
4.
consumers.
Yeah, so I wanted to talk about consumer staples as well. And what's fascinating to me is that some of these consumer staples start. Well, let's start with actually XLP, which is the consumer staples ETF, right? And that has not really turned yet.
No.
But it's been quite the run this year. I mean, these staple stocks are running like it's a bull market. And I guess that is that whole theme that we have seen where there's huge money flow going into the low vol space.
Right.
Right, and there's a lot of these low vol ETFs that are where the sentiment out there is that some recession is coming. So you don't want to go to cash. So what you do is you move, go from high beta, low beta, right? You do a little bit of a rotation.
And this has been a big kind of receiver of those funds, and so it's exploded higher.
Right, but what's interesting is that some of the names with some of the biggest holdings within this space have started to see some turns. Right, and now while we haven't seen a big turn in Procter & Gamble, which is the largest component within this, but like if you go to like Coca-Cola. Well, actually, I wouldn't even call that. It had a big reversal there. But like one that caught my attention was Colgate right here. And you can see like Colgate's been struggling up along its highs for pretty much almost 4 months straight. And we saw a pretty hard reversal in Costco. And then you see those stocks, those tobacco stocks like Philip Morris getting hammered because of the e-cigarette news. We're starting to see a lot of these little components starting to drag, and then even though I know McDonald's is not a big, labeled as a big staple, I consider it a staple because it's just like so many people actually.
Patrick, we're not talking about your diet here.
Yeah, we're not talking about my diet, but like look at that break. I mean, listen, for any junior technician, drawing this trend line and seeing that gap break through that trend line has got to be on everyone's radar, right?
Especially those junior ones. I'm still laughing at my McDonald's joke, buddy. Okay, watch the consumer staples. Patrick's got a feeling, and he's no junior technician. He's a senior one. Okay, number 3. Let's see what we got going here. Breakout in palladium and
that was
beans.
your idea. So beans were mine. Palladium was yours.
We really should have had 6, but we just both wanted to talk about it. I'm kind of hesitant to talk about palladium because I'm worried the moment we talk about it, we're going to give it the kiss of death.
Which is a true test of a trend, isn't it? Like if you think about it, if we can talk about it in the huddle and you didn't turn it, it's for real.
That's funny. That's a true test. If we could talk about it and cause it to, but listen, is that not? I am a junior technician. I might not even.
That's a break.
Well, not only that, isn't that a cup and handle kind of jobby or whatever?
So what I would call the pattern would be an ascending triangle, right? And so you have this pattern of ascending triangle becomes the midpoint, and a breakout's going to 2,000 on the upside.
But what's amazing about this was done in the midst of gold getting whacked for like $50, right? More than $50. What are we down in gold? Oh yeah, no, it's $50.
This has not had a correlation to gold.
Yeah, I know. It's not
years.
It's not a precious metal anymore, and it's trading basically. I guess what's amazing about it is it actually goes into old school kind of gas cars, and yet you would think with the move to electric vehicles that we would see being less palladium, but meanwhile this thing just keeps rocketing higher.
Yeah.
It's one of my kind of sleeper commodities that you should be watching, and I continue to like it.
Yeah, absolutely. All right, but so the other commodity that I wanted to touch on is soybean. And as a technician, I love it when something consolidates, doesn't make a lower low, and then gets a decisive breakout candle like this. Now I know you're gonna give me this ag thing of you don't trade it in the middle of the harvest and all this stuff.
No, I know.
But
I'm just saying that it's probably going to get sleepy from here. I'm not sure we're going to get a huge move. Now the true ag guys will tell or gals will tell me that maybe that's wrong. I just to me it's kind of all the actions done, but we'll see.
I'll make the call. I think we're going to retest the high. I think that at least the high of 2019, which is around
but that's not really that much of a call.
No, that's not. That's not. But listen, if you're looking for a call to 10 plus, then I don't think so. But this 930, I think that we could be there in the next couple of weeks. It's a good breakout. Let's see.
Yeah, we're gonna get Angie back, and Angie's one of our favorite ag follows, and she's the goddess of grains, and she'll tell us how we're wrong and how we don't know what we're talking about. Number 2, let's have a look here. What do you got?
Well, the euro, right?
Here we go. So, Patrick, how bearish were you down there, buddy?
I'm very bearish. I continue to be bearish, but you know what? So far, I've got a little egg on my face from you.
Well, to be fair, you know what though? It really let's face it, we could be back down to 109 next week.
Right.
But it's not that big a move. It's nothing. I'm not going to sit here and give you a hard time about it because the reality is that that's just noise. And I
don't think this is noise. I don't think it's noise.
Oh my God.
You know what? What I have. You tell me whether you have seen this as well. But what I've often seen is that whenever you have a major meeting, whether it's a Fed or an ECB or some other thing, that the first hour it has some form of a trend reaction move, an impulse move, and then it reverses, and then a big trend happens for weeks, the exact opposite direction of the first hour. And
we always joke that they take it the wrong way first.
Yeah.
They always take it the wrong way. They always take it the wrong way.
And so my feeling here is that kind of little mini double bottom toward 109 off of the ECB may have marked not an intermediate or long-term bottom, but certainly it may have marked a short-term bottom. And it would not surprise me if we're at 112 or even 113 in the coming week or two. Now, that doesn't change my bigger view that I'm bullish the dollar, but certainly when I see that type of a reaction, it means that maybe the move's not going to happen in this window of the month of September, and that it's going to probably mean revert a little bit for the next couple of weeks. What's your take on that? You think agree or disagree?
Well, I can tell you that everyone should go out and short the euro because both you and I are bullish, and that's not going to work.
Why'd you Gucci my trade?
Yeah, I've been bullish because I'm bullish and wrong all the way down. So I continue to think that it's just a self-imposed problem from the Europeans, and they could fix it relatively quickly. And hopefully that this sign that Draghi is not going to continue to try to do more monetary and actually does fiscal. I contend that if there was a change in attitude in Germany, the euro would see 120 before you could blink. And I know that sounds crazy, but imagine they went and did what Trump did. Imagine they went and said, we're going to cut taxes. We're going to go cut taxes for the tune of 3% of GDP.
That is so un-European.
I know it is. I completely understand it. I get it. But I'm telling you that they've reached the end of monetarism. And for you to continue betting that they're going to keep slamming their head against the wall, you might be right, but it doesn't make logical sense. That's all I can say. Anyways, let's go to number 1. What do we got?
Number 1. Well, number 1 was that huge momentum value shift, right, Kev?
Yeah,
now,
it was actually large, way larger than the headlines, and everyone realizes.
So I know you have a metric for it. I want to show you your slide in a moment. But what I did here was take the iShares momentum factor versus the value factor. Just divide the two so we can really see the magnitude of this drop. And while it's certainly not even back to its April levels, what is amazing is that in literally a span of a week, we wiped 10% on the differential.
For sure. And if you're if you're a long only investor, you basically, that just means that if you were in those momentum names, you underperformed. But if you're a hedge fund and you're like a market neutral fund, you gotten just like a quant fund, you probably gotten hammered this
because
first
they
2
leverage
weeks.
up on their long shorts,
Yeah.
right? So
Now, granted, like it had pushed to new highs in August, but it sure looked ugly in September. And
so,
go
like,
ahead,
just
Patrick.
going back to this chart. So, while the market seemed to be doing nothing during the summer from May to August, anyone who was long momentum against short value was doing extraordinary.
Well, yeah, and so I contend that this summer was actually much more violent than the market averages kind of indicate. And I think the fact that we had that move in the government bonds, like if we go to the government bond index, it was the greatest increase we've had since the great financial crisis. Like, let's step back and remember, I've said this before, but the great financial crisis, we had unemployment, with double digits. We had banks not trusting each other, going out of business. People foreclosing on houses. We're sitting here with absolutely, the economy not really showing that much signs of rolling over. Like, yes, it's weaker, but it's nowhere near the depths of despair that we had in 2007. And yet we just had the bond market, put in a price performance that was equal to that level. And I contend that there was actually a lot of pain that was occurring, and there's a lot of crazy shit that was happening. And the fact that this is now unwinding is not surprising to me. And the real question is, does this get worse from here, Patrick? Yeah. Do we see the value kind of really get a bid and the momentum stocks continue to get hammered? And even so, like, do we see those high-tech flyers really get crunched?
And and that reminds me of the FANGs getting killed. Was it 2016, 17? When was the big FANG rout? That basically the market was fine, but the FANGs were being murdered.
Right. And there's been other times as well that there's been huge moves within the market where there's quant crashes, where different factors go and they get crushed one versus the other. And if you're like sitting there as a regular investor, you think, oh, what's the big deal? Nothing's happening. Well, the reality is that the Renaissances or whoever has these trades on big, it's probably not Renaissance because they're way smarter than that, but all the kind of the ETF kind of smart beta guys, they're getting just crushed. And I still think that there is a chance that this was, or at least I hope, and I'm not, maybe I'm just talking my book, a switch into value. A switch out of these names, out of the kind of low volatility names, out of these factors into real names, and maybe that coincided with this end of this huge rally and chase into equities. Into bonds, and maybe that was really a blow off top in safety. And I think that's something you should think about. Was August, the end of August, a blow-off top in safety? And then if you believe it was, what does that mean going forward? It's not an easy
But so
answer.
when you say blow-off of safety, are you also lumping in, therefore, the staples and utilities and all of this stuff?
Exactly. I didn't want to go too much down that road when we were talking about the staples, but to me, it's not surprising those things are rolling over with they've been a beneficiary of all this kind of rush into safety. And It's kind of been ironic because it's both safety and extreme growth that the investors have chased. It's like the
safety and growth, as in that you'll grow your way into the valuation.
No, safety,
safety
stocks, and then also growth stocks.
Yeah.
So it's been kind of like a barbell approach that many investors have taken. And so they'll be bidding up like low volatility, staples, and then also at the same time bidding for the, the growth stocks.
Yeah, like Visa getting hammered, PayPal, MasterCard, you name it. Those growth names are it's just been getting killed.
So I think that there could be the start of a much bigger kind of theme
what
going
do you
on.
have? Do you have a little bit? What's your bias from a sector perspective where you think there's value? Like, are you in the value from financials? Or are you more value in?
So I think financials.
Value?
I think financials are cheap. I think energy is dirt cheap. Whether it's, I'm worried that I'm buying the whale oil, but the fact that I'm worried about that means you should probably buy it. And I'm not worried that I actually believe it is whale oil, but I'm just worried that nobody else is going to. Everyone else.
I nearly choked on my beer when you said that, right? Like,
the
anyway.
whale oil.
But and obviously home builders, you're gonna have to throw it in there.
Yeah,
right?
that was going to be my number one pick. I think that home builders are just a screaming buy, and as American home builders, I think I continue. I said it a year ago. I continue to say it is going to be the best performing sector. I think it's going to lead the way out of the next kind of this slowdown. And the real question is whether this dip that we're seeing in the economy, whether that was enough to reset and actually be kind of a pause that refreshes, and now we kind of go on a new economic cyclical upturn. I don't know. I'm not calling it, saying it's for sure going to happen, because to me it's going to depend on the what the politicians do from the fiscal side. But if they pull out their wallet and start spending, then I'm going to be bullish as all hell, and I'm going to say
the one thing. Listen, I remain of the opinion that we're about to see some sort of an economic downturn. I know it's so consensus at this moment, but the one thing I will say is that the way that the slowdown actually plays out and what works and doesn't work will be, I think, far different than any of the past bear market cycles we had. And I think if you're using 2008 as a template, it's just not going to play out anything like that. And so there'll be things that will work, different things that will break. It's about intuitively trying to see how the unfolding reality is playing out for us, right? Because I just don't think you can go to a playbook from the last bear market and
you should never do that, to be truthful, because I contend that that's the problem everyone does. Everyone takes the playbook from the last bear market and basically assumes it's going to look exactly like that one, and it never does. The 2000, the dot-com crash didn't look anything like the 1987 crash or the 1994 slowdown. Then the 2007 didn't look anything like the dot-com crash. Everyone was, people forget, but everyone was super bearish technology in 2007.
Yeah.
Everyone thought that was going to be what crushes us, and there's all sorts of worries about that. And I contend it's going to be the same. You're going to see that everyone's sitting around worried about whatever it is that hurt us last time, and it's not going to be the same. And I still contend that it's not going to come from the equity market, and it's not going to, that it'll be something different, and it won't be, maybe it's corporate bonds, but I just don't see it, because in essence, credit was what caused it last time. I'd still be more worried over the long run about inflation being the thing that ultimately causes the next crash. And I think it could be a whiles away, because so far it looks like I'm really wrong on my inflation call, Patrick.
You are. But anyway, I'm not. Let's leave it at that.
Okay, so listen, one last thing. We're talking about this. We never talked about this slide that I brought up. Put it back there, Patrick, because this is from Bloomberg, and I just, for people that want to get an idea, Bloomberg has this great function, FTW, and it's basically factor investing of some sort. I don't know what that stands for, but you can see that the kind of performance of the different types of strategies, and you see that U.S. This is year to date, this is a rolling week. This is the past week. I was completely wrong. This is the past week. But the U.S. momentum was down almost 10%, whereas portfolio U.S. value was up almost 5%. And that just sums up the factors that were working over the past week. And it was a huge, huge move from momentum into value. You kind of had a great chart there of the two indices. I think it's something you continue to watch. For people that are interested in investing in value stocks, have a look at IWN, which is the Russell 3000 value name.
2000.
Yeah, the 3000, isn't it? Is it 2000? Oh no, it's the 2000. You're absolutely right, Patrick. You're better at these things than me. It had a great week. I contend it's down and out. I've long held the view that value is one of the last remaining cheap assets, and I still contend that. And hopefully this is the start of a longer term.
Let's just have a quick, because our listeners may enjoy this, but this is a weekly chart, and you're absolutely right that the Russell 2000 value is just after spending pretty much 2 years in the gutter. I mean, it made its peak just after the Vol of Volmageddon. And it's been down and out.
And it's greatly underperformed the growth one, which is IWO.
Yeah, absolutely. And then there's the iShares value. This is the value factor MSCI.
What's the symbol there? Give her
VLUE.
Okay, that
actually
is
value without the A.
Right, and it actually went and it broke to new highs there. So
no, not new highs, just
but new highs for this move, yeah.
For 2019, it's at a higher high, but it hasn't beat its 2018 highs. But that's a pure value factor play. And so the question is, is value coming back? It's going to be one of the more interesting things for us to watch. We should definitely circle back a couple times to this just to see whether or not there's something here or whether this is just a one week wonder. Anyway, let's continue on. So, Kev, you were going to leave us with parting words of wisdom.
Yeah, so I think that this is something that was geared towards me this summer.
I thought you picked this the moment I put in REMX into the rare earths into the
No, actually,
list.
I was thinking about it from my own point of view.
But you were certainly talking rare earths when you came up with this.
No, I was talking bonds when I was talking this. And here, I'll read it to you. What seems too high and risky to the majority generally goes higher, and what seems low and cheap generally goes lower, by William O'Neill.
Yeah.
And I just, I never would have thought that that would have happened to the bonds. They really caught me off guard in terms of how much they ran them. And,
this is what I like about Tony. I'm gonna give Tony Greer a shout out, right? Because he's a trend follower, and he's not scared to buy high to sell higher when something is working, and he's willing to work with a trend. And I personally find it very hard. I try so hard to catch early into a trend because I know once it's moved too much, it just becomes so hard for me to keep buying it at higher prices. It's just this emotional roadblock, right?
Right, and I think that George Soros says, "When I see a bubble, I buy it," and that's smart. It's hard, and that's the true genius of trading, is to be able to go and identify those things. And at the very least, you know what? If you're gonna be short, you better hang on, because you gotta stick with it. Otherwise, when it bursts, if you don't make it back, you're just gonna find yourself get all chopped up. But anyways, William O'Neill. That's for both bonds for me this summer and rare earths for Patrick this fall. There's some little parting words of wisdom.
All right.
Okay. So Patrick, why don't you give us
where can they find you?
I'm at Kevin Muir on Twitter. I'm pretty busy on that thing. And then you can always look at me at themacrotourist.com. Now, Patrick, I'm going to say something right here. I have not written lately very much. Yeah. I'm going to say it on air so that it forces me to go do it. I'm going to write some more. So watch for it. Go sign up. Macrotourist.com. It's coming. Patrick, where can they find you?
Yeah, you can find me at bigpicturetrading.com or go to my Twitter handles at Patrick Ceresna. And you can follow me on there. Otherwise, make sure you register for the Market Huddle. If you find that the show is too long, we have broken it up into
Join the
Market.
club.
Join the club. The Market Huddle segments is available on the podcast players, or you can find the separate segments on YouTube as well.
We haven't talked about that in a while, have we?
Yeah, we haven't. And so you can just go to the segments and just listen each segment at a time. It's more palatable than to try to jam a couple hours down your throat.
Yeah, so just to explain that, there's two different feeds on iTunes. There's the regular Market Huddle feed, and then what we did was we went and divided it up and made some Market Huddle segments. And so when you go every week, there's going to be like 6 or 7 different segments, and you could just download the ones you want, mainly those of the guests, so you can avoid Patrick and myself. And one last thing, Patrick, before we go, tell everyone again What is it? Friday, next Friday, a week today.
Right. Oh my goodness. Where's the slide? Hold on. Let me try figure out where to get this. Anyway, we got the Market Huddle. Chai Girl.
And
the
Patrick
Market Huddle
and myself. Go drink some beers. We're going to talk markets. We're going to have some fun at the Rec Room, which is downtown.
Okay, hold on. Let me try get the slide.
Yeah,
there we go.
Well,
All
you'll
right.
get it. But anyways, the Rec Room, which is downtown, 255 Bremner Boulevard, Toronto, Ontario. We're going to be there at 7 p.m. Friday, September 20th. Everybody welcome. Chai Girl, Patrick, and myself. I'm the chubby
if you're
bald
going,
guy.
If you're
Patrick
going to
will be the guy that's had too many beers already.
Yeah, but to clarify, anyone that's going to be at the Money Show before going to the Rec Room at 5:30, starting over at the Big Picture Trading little booth, we're having a pre-drink, and then we're going to walk over to the Rec Room. So if you're at the Money Show, first come there. We'll walk over. If you're not going to be at the Money Show, just meet us at the Rec Room. You can come anytime, 8 o'clock, 9 o'clock, whatever. Make sure you say hello. We're always happy to meet our listeners. It'd be great to see all of you out there.
That's right.
And Lena will be there. We didn't even mention that. Lena's been like, Lena, get on here. So like.
Okay, 1 second. Actually, let's sign off so we can sign off, and then we'll get into the after hours.
Okay. Sure. Absolutely.
Okay. So everyone, thanks for joining us. A big thanks to Scott and Tony, and make sure you remember Tony's every second Friday, and Cuppy's Corner last Friday of every month. Thanks for joining us, and have a great week. We'll talk to you next week.
Absolutely. Thanks for joining us.
Okay, joining us now is Volatility Whiz, Scott Murray, and we kind of teased it a little bit about the fact that you're from Boston, Scott, and I think when we were chatting with Lena beforehand, Lena asked if isn't Boston the team that we lose to as the Toronto Maple Leafs every year, and at which point Patrick said yes. So, you're kind of our nemesis, but I said to myself, it's tough to get too mad at him because he is the home of Bobby Orr, so it's almost Canada, I kind of figure, with the greatest hockey player of all time being from your hometown.
Well, I can say the Leafs are like our nemesis. We have the Canadians, right?
Right.
Well, we're not good enough to be your nemesis.
Exactly.
We're not good enough to be your nemesis.
They just like crush the Toronto. It doesn't even matter. It's like when are the Canadians back in town?
Yeah, fair enough. So I do have a question for you, Scott. Because
before you change the topic, I do want.
It's a question about hockey. It's actually I'm keeping it on topic here, Patrick.
All right.
I did see that we talked a little bit about the worst fans in the U.S. And I take it, you kind of help me and understand this, that it's a little bit of a kind of a competition between you guys in Philadelphia for the worst fans of the U.S. Is this true? And are you going to defend yourself as a Bostonian that you're not the worst fan and it actually is Philadelphia?
I think we are the worst fans. I think it's not even close because when I go to Philadelphia, when I go there, it feels like people are nice to me.
Oh, okay. I heard that someone in the Philadelphia, they threw batteries at an opposing team or something, or the mascot or something.
No, that was Yankees. That was at Yankee Stadium, actually, the battery throwing. But I will be able to see this firsthand. I'll be at the Patriots-Eagles game in November, so I'll let you know how poorly I get treated, in my Patriots garb.
Nice. Well, you know what? I
think why are Bostonians hated so much as a fan, though?
Well, probably because we win everything.
Oh. The cockiness comes out. I just cursed you this year.
I don't understand why you guys are hated at all, Scott. I don't get it.
All right, so Scott, I cursed the Bruins because I in my hockey pool I took Brad Marchand. So whenever I draft a guy on my team, it always goes wrong for that player. So the fact that he's on my hockey pool team is a little bit of a curse for you guys.
Yeah, that line, that line was just awful.
Awful.
Most of the playoffs. Yeah. So, I mean, hey, I don't know. I sort of like how the team. The only problem with the team right now is the goalie, really. Like, everyone just complains about Tuukka nonstop.
Really?
Well, I mean, you saw how soft he was, like, when it came down to crunch time. I mean, the last time we won, it was Tim Thomas. It wasn't him.
Yeah.
So.
You know that
Everyone
Rask was drafted originally by Toronto, and I think I think the trade was Rask for was it Raycroft? Oh, I'm trying to remember, but it was a goalie swap, and it was a complete disaster for the Leafs, and you guys landed Rask, and he's been a curse for the Leafs ever since. Did you know that?
Yeah. Well. No, I didn't know that.
He's a Leaf
We're
killer.
Talking about what?
Basically, Scott doesn't know anything about the Leafs because he doesn't view us as a true threat. Okay, let's talk some markets here.
Yeah.
Let's
But
figure
that was
out
a
what.
first round series.
Yeah, that's right.
Right?
So it's just for us, we're traumatized, but you actually have other people to be traumatized by. Okay, so let's talk some markets here. What the bond market? Do you think this volatility is going to increase, or do you think it's going to settle down?
Well, I was going to ask you, do you think higher bond market volatility sort of presages equity market volatility?
That's a great question.
That's what I'm wondering right now.
Yeah, that's a great question. And today, for the first time, we had the bond market acting shaky, and I thought to myself, oh, it looks like it's actually affecting the stock market. So I don't disagree with you, but I don't think that it's going to be kind of the trigger that causes a stock market true sell-off. But I definitely wonder about the fact that I'm kind of surprised that people are so taken aback by this bond market, pullback. Like we screamed up on nothing. Like it's run like it stole something. And yes, the TLT's down 5 handles and the futures are down, whatever they're down. But in the grand scheme of things, it's still being a bull market. And I'm kind of shocked that people are feeling as much pain as they are. And it just, I guess, shows how over their skis they really were.
Well, I mean, psychologically, whenever somebody has like a huge profit and you're not at your top tick, they start complaining, right? So you give them 20% in treasuries and you take like 10% away and they're going to start whining. That's not, that's just human behavior. Right. But I mean, I haven't seen anything really happen in the corporate bond market yet, which is where obviously, you could have some serious problems develop. But, there was just an enormous amount of corporate bond issuance last week. Almost like, you saw auto sales for last month. Everyone just runs, right, to grab rates when they can. And then it's almost like pull forward demand. So when you see like issues in the corporate bond market, especially like, lower rated stuff, I mean, that's when you would probably be concerned. I mean, one thing that interests me is, and I'm sure you've talked to like at Barton Options or Zhang, like my buddy Zhang. I mean, he's looking at, the Treasury general account balance is going to have to rise significantly over the next quarter. And that's, there's a lot of supply coming to market. So for treasuries to be like asking for a little bit more yield here is not like really that big of a surprise, because they know that there's more behind it.
Yeah, it was a big surprise for the bond bulls who were all falling all over themselves, telling you how rates were going to zero in late August. Like I saw some pretty prominent people even predicting negative rates in the States, and I thought to myself, "Oh my God, that's just like I thought it was like here we go." What I'm shocked about the bonds. Sorry, go ahead.
You mean like Temco?
There's lots of people doing it. We don't need to pick on anyone. I have those in glass houses shouldn't throw stones, and I have lots of bad calls, so I'm not going to name any names. But the reality is that I was kind of shocked that there wasn't more caution by some of the bond bulls who had really gotten it, because to me, like David Zervos, who was bullish on bonds, he rightfully kind of bowed out in August, and he really nailed the call. And I thought that was a great call. And he might have been a week early, but in the grand scheme of things, this looks like now when we're 5 handles lower on the TLT, he's looking like much smarter.
It's funny that you're giving him kudos, but you didn't give me kudos. So I pulled out on my TLTs. I was a bond bull. Yeah, but I'm not worth mentioning. You don't want to give your co-host kudos for settling. Well, actually, I did unload my TLTs like at 140, so I missed the last.
Yeah, I think you were a little early. Like you're a little early. So your wife, I'm not going to give you kudos for being early.
but Kevin's always like, hey, if there's QE coming, rates are going up. So like QE is coming, so rates must go up, right?
Well, I do believe that, and even though that is kind of counterintuitive to both bond bulls and also kind of new age MMT type economists, I still believe that I am in the Druckenmiller camp. That I believe that a QE causes the long end to back up. I do believe that. I am me and Druckenmiller. You're not going to convince me otherwise. I
mean, well, you. On your tremendous blog, I call it macro comedy, right?
Yeah. Because you can't take it seriously. But okay, that's fair enough.
Now that is a great name, macro comedy. I love that. That's awesome.
Yeah. I mean, at least it's backed up with the chart. QE starts here, rates go here. QE starts here, rates go here, and it's pretty simple.
So, Scott, I wanted to pick your mind on what's going on with these unicorns and IPOs, and what's your thinking here?
Well, watching yesterday's, what was it, Smile Dental Corporation or something, SDC dropped like 25%. Like what I'm having trouble understanding is, usually, there's a green shoe, right? So JP Morgan and Citigroup are running it. And obviously they weren't in the market buying, right? And like insiders are sort of stuck. There's a lockup, and you can't short it because you can't borrow. Like, how does an IPO like that drop 25%? It's almost as if, when they're making the book originally, the people that, these banks stuffed it down people's channels in the hopes that they might get the call for like the next Beyond Meat, and then just dumped it as soon as it opened. I mean, how does an IPO? I'm just curious. How does an IPO like that drop so precipitously at the open of trade? Because it's just not easy for something like that to happen.
Well, a couple of things. I can talk to you. This is Kevin. So first of all, some people might put in orders for too much, assuming that they're going to get cut way back. Like, so for example, when you're buying Beyond Meat, you might have put in for 10,000 and you get like 100 shares. So the next time, the next hot one comes along, you say, well, I'm going to put in for 100,000 and I'm going to get 1,000 shares instead. But the trouble is you put in for 100,000 and all of a sudden you get 30,000 instead of, the 1,000 you were expecting. And then the other thing is that you just get people that are just flipping it. They're just, and you'd be surprised how many fundamental investors are at the end of a bull market end up being nothing more than the IPO flippers. Like, and it just ends up like, I have friends that manage very serious long-term money, and they'll just tell me, they'll say, oh, you know what, I got my allocation of Beyond Meat, I sold it on the day they open, and they're just viewing it as easy free money, so they take it. And the trouble is that eventually at the end of the cycle, as you mentioned, that there's too many of these people doing this expecting free money, and once there's free money, it attracts too many people and eventually it hurts them. But even more interesting than that is the WeWork.
Yeah, that was, thank you. I was about to ask about WeWork. Okay, go for it.
Yeah, so go ahead, Scott. What do you think about that little gem?
Well, I mean, I've read, what people have. I've read some great articles about the people that actually do the work reading the S1 and stuff, and it doesn't look very good. They did clean it up, and I did hear that SoftBank really wanted to shelve it for a while because, I mean, they got a huge stake in it. But, I mean, the comps don't seem to work. You can't just put a social gloss over it and pretend that it's actually going to make money. Uber and Lyft have already tried that with their social EBITDA, and that's not cutting it. So, who knows? I would have thought it was going to get pulled, but apparently it's going to get jammed down someone's throat next week.
Oh, they're continuing,
Right?
even though SoftBank's telling them not to do it. Oh, I didn't know that. They're going to do it.
Today they rewrote the filing. Yeah.
Oh, okay. To me, this might be the poster child of the abuses of the unicorn market and the private markets. And that's how I'm looking at this.
For sure it is.
Yeah, like this is just the atrocities from an accounting perspective and abuse of shareholders that is done by this management, or allegedly done by this management. At the very least, it seems like they've stretched things to let's just say in a degree that we haven't seen in a long, long time. And the fact that the market is finally waking up and saying, hey, wait, this isn't, we're not going to buy this, is encouraging from a perspective of, at the very least, they're getting more kind of discerning. But what I worry about is the fact that how many of these private kind of unicorns that are trading in the private market are going to have to get re-rated now. And is the real bubble not in the public markets, but yet in the private markets? And this is what worries me. And how does this manifest itself? I don't know. Like, what if we just had a crash in unicorns and it didn't actually do anything to the stock market, which I could for sure see happening?
Right.
Well, I guess you would have to follow San Francisco real estate really closely, I guess, right?
Oh, well,
I mean, that's almost like an indicator.
Yeah, no, you're absolutely correct. But what's interesting is there's no real leverage in the system. So if we did have a crash in like private market unicorn values, it wouldn't necessarily translate into like the average stock having to go down. I'm sure there'll be some kind of knock-on effects, but it's not the kind of thing that like when we saw with the housing bubble where there was all sorts of leverage in the system and the one kind of beget the other, and next thing we knew we had a selling wave. So, nothing would make me kind of happier as a value investor than to see some of these stupid valuations go down. And investors, instead of chasing these, WeWorks and other kind of, stupidities like that, they actually go out and buy, mom and pop kind of Main Street stocks. And that's what I keep hoping for.
Right. Well, there used to be a time, when an IPO would come out and it would be a good investment, and that seems like that's almost never now, right?
Yeah. I think that if you look statistically, IPOs on the whole underperform, and it was actually interesting that there's an IPO ETF, and they hold it for the next kind of year or two. I can't remember what the holding period was, but it was leading the charge. And it was leading the charge in this bull market. And I was thinking to myself, this isn't actually the way it's supposed to be over time. And what's kind of like, even though the S&P is sitting at all-time new highs almost today, or really close, this IPO ETF is still not anywhere near the highs that we saw kind of before the summer. So maybe this is a good sign. And
it's interesting.
Go ahead, Scott.
What's interesting about that is there's like two ETFs that specialize in holding IPOs, and the market caps on those are like tiny. Like nobody wants them.
Oh, that's interesting. Nobody. Everyone's too busy in the SPLV, which is the S&P Low Volatility Index.
Yeah, you might as well buy some toilet paper for 45 times earnings, right?
But it's safe, and it's got bond-like proxy of
exactly.
It's just that's another example of just the absurdity, and the chase for that this summer again was another one of those. Like it was kind of interesting this summer. You had like a chase in technology, and then you also had a chase in safety.
Yeah,
it was a wild summer.
What did you think of what you saw? What did you think of what you saw last week? I mean, it was like you look at names like Visa going down, and MasterCard, but you're like, well, these companies were out of control all year, so that makes sense to me. So people were just pulling. It looked like people were pulling off like the stuff that had performed the best all year now. Before the Fed screws it up for them. Screws up their year.
Oh, you think that's the worry? You think that they're worried that the Fed's not going to go and lower rates quickly enough?
Well, no, it's just it's it's kind of a binary event, and the trade thing is too that you have a binary event here. So if you're sitting on like a 50% gain in Visa, which is pretty much a fact, right?
Yeah.
Like you're going to pull that, right?
Right. So listen, actually,
you would at least consider it.
Yeah. Speaking of Trump tweets, and I see that you're a big fan of saying that things matter a lot more than Trump, and that you actually or think the market gets too excited about each tweet. Is that true? Like, did I read that correctly in your latest letter?
Oh, that I said that they're less important than okay. I think that Mnuchin knows, as a Goldman vet, exactly where we sit in the options expiration cycle, and he pulls out his like gamma tweets, or he has Trump tweet to cause gamma like when he wants.
You're kidding.
So
You actually think
okay,
he's that sophisticated that he's looking at the gamma and he's going, okay, there's short all sorts of gamma here. I want you to do it now.
So I have my tinfoil hat on with this one, right? And, and everyone's got their like invisible hand conspiracy theory stuff, right?
Yeah.
So for me, it's as boring as Mnuchin going like, all right, I'm going to tell Trump to tweet out this trade news, right, on as soon as I see that gamma exposure is really high or whatever. So you get an outsized move, in the markets to prop it, or get it to a higher level without that much buying power required, sort of thing.
Well, way back when, I think it was in the 90s, or maybe it's the 90s or 80s, I think that Greenspan did that. He cut rates 50 basis points in a surprise cut, and he did it on a Friday afternoon of expiry. And I think it was one of the largest one-day rises that the stock market's ever seen. I think it was up like 12 or 15%. I can't remember the numbers, but it was definitely a surprise cut. And there was all sorts of Chicago guys and people that trade options that figured that he did it on purpose to get the most kind of bang for his buck.
Well, maybe that's true. So you think that my theory has merit.
Well, I think you're giving them a little too much credit. That's where I kind of fall down on buying your argument. And although he was a Goldman guy, I'm not sure what did he do at Goldman? Was he a trader or was he an investment banker? I can't even remember.
Yeah.
Come on, all those guys, they know what's going on.
Okay.
Why do you think he took the job in the first place, right? Why do you think Mnuchin would take that job?
I don't know. You tell me. You think it was just like to trade his own, like to?
Well, if you do a certain amount of government service, okay, you get like a long-term tax exemption, or your long-term gains are exempt from tax, I think. So if you've got a massive portfolio of, equity, then you're good.
Listen, I completely buy that argument, and that's why Cohen joined. And when everyone's saying he was going to quit, I said he's not going to quit because you have to work for a little bit of I can't remember whether it was a year or whatever the time period was. And I said he's never going to quit before then, because the reality is that he's going to be there until he gets his tax exemption. But I think Mnuchin is well through that period. I think he just likes being on TV or whatever. Or Mrs. Mnuchin likes visiting the Federal Reserve and seeing the dollar bills. I'm not really sure why he did it. Maybe you're right. Maybe he understands things that well, and I hope that they're that smart and shrewd.
Yeah.
I worry they're not, and it's just when Trump's on the toilet wondering what he's going to tweet, I just worry that's all that's going on there.
All right. Listen, I want to change the topic a bit here because before we wrap up with Scott, I wanted to get back into some options trading with you. And obviously, I'm certain that as a volatility guy that you are you're willing to be long and short options whenever you see the opportunity. But what would you say is your natural inclination? I mean, are you more generally a seller of premium? What is your sort of go-to just from your personality or in terms of the way you trade options?
Yeah, that's a great question, because things are changing a lot. like especially in the past year. So selling options used to be something that, you know, was a good idea when premiums were higher, but like I think that all sort of ended around like 2016, and selling premium on either side just seems like it's high risk. It's almost like premiums might be too low at this point. Something that I keep looking into and I keep talking about, but no one seems to sort of realize it exists, is something I call trend volatility. And that is like, say, one directional volatility. So if you have, you know, 25 delta call, you know, that prices out 90 days and it's like $1 and it goes to like $8, then it's obvious that trend volatility is very high, right? So at the beginning of the year, I mean, you had, you know, the move, you know, through April, it was basically in one direction, right? So just buying calls, right, was a good idea. Whereas people that were trying to sell covered calls, I mean, they just kept, or just selling premium, they just kept getting burned, right? Yeah. So like iron condors or like, okay. So the landscape has changed. Like selling volatility is much more dangerous. I mean, as far as like, you know, index premium is concerned, it's far more dangerous now than I've ever seen. So I basically never do that. I always want to like define my risk by like having, you know, a corresponding position where if my trade goes like, you know, into the toilet and, you know, I'm just out the premium.
Are you more into like the calendaring of your hedges for something like that, or do you do just more pure on spread trades?
Well, I'm almost always doing a time spread. You know, I don't. You know, I try not to do vertical stuff so much. You know, I just don't. But because that means that I'm sort of thinking about what direction the market's going in, and I don't really like to do that, right? I don't like to gamble on direction. So I'll leave that to all the, you know, morons on CNBC to do that. But, you know,
and me. And those with podcasts, and those with podcasts as well.
Yeah. So, I mean, I'm just trying, you know, in general, I'm just trying to like, so the Fed meeting and like the trade talks and stuff, those are like great times for me because I'm going to look at, you know, I'm still waiting to find out when the China actual sit down is. Like, is there even a date yet?
Oh,
I don't think there is. I don't know. Like he's just, it's whatever he tweets, whatever he's feeling like on, as I say, when he's in the washroom having on his break.
Yeah. So I mean, I'd like to know. I mean, why is it a big secret?
Yeah.
But as soon as that happens, then I'll look at, you know, I'll go specifically to the term structure of vol, and I'll see where the premium is, pair it up, kind of maybe try to figure out, you know, if the market has a little bit too much like hope for a deal, you know, and then set like a pair below it. But like, you know, for the most part, like I'm not thinking about direction and not selling naked because, I mean, to me, that's sort of how you don't stay in business for a long time.
Right. Yeah. Okay. Well, Scott, on those wise words, we're going to wish you adieu and say thank you very much for coming by. One last time, where can people find you on Twitter?
At VolatilityWiz.
At VolatilityWiz it is.
Thank you so much for having me on. I really appreciate it.
Oh, it was a pleasure having
Scott,
you
it was
on.
Great.
And even though you're our nemesis on Boston, we'll look forward to maybe someday being good enough to be your nemesis.
Awesome.
All right.
Take care.
Thanks, Scott.
Again.
It was great having you on. So, Lena.
Yeah.
It was a good show, right? Now,
Yeah.
So, but listen, you've been under the
radar when she says that.
Yeah.
What?
I love how she giggles when she says that. Yeah. Okay.
Yeah. Whatever. Whatever.
No, I'm just laughing at the progression from like the beginning of the recording where you guys like, oh, it's, you know, Friday, September 13th, and you're all peppy, and then towards the end of it, you guys are like, I don't know.
Yeah, that's
the talking over each other.
8% Lawson's Fine Liquids.
Oh yeah, wait, we have to talk about this.
Oh,
but
yeah,
listen,
Patrick,
wait. So Patrick wanted to say something about you sneaking,
Yeah.
like,
No, listen. Nobody's ever had the opportunity to mingle with Lena yet.
That's true.
But where Lena and and the Big Picture Trading team, Luke and Christiane, are going to be out there as well. And so it's going to be a great event. Like I'm looking forward to just chatting with everyone. It's going to be a lot of fun. You looking forward to it, Lena?
Yeah, we're gonna get wrecked at the rec room.
Oh, that's awesome.
Responsible drinking now, Lena. We do not condone that.
Yeah, we're not doing the Christmas drinking.
That's right. Whoa, I didn't bring it up, but if anyone wants to ask, you ask Lena how she did Christmas. So listen, Lena, what do you think of our sip of sunshine?
I have to be honest, this is not my favorite.
Yeah, we're gonna have to. Okay, time to pull out the votes. Why don't we let Patrick start? He's gonna be higher than both Lena and I. The only question is how high will Patrick be and how low will we be? Go ahead, Patrick.
Well, I'm gonna just say it again. I rate really between 5
Patrick,
to 10.
we know. Just give us your vote.
I'm going 8.1.
Yeah, okay. He gives us this speech about how like 8.1 isn't that big of good. Anyways,
that's good. I think that's above average.
Okay, Lena, what do you think?
I don't know if I would buy it though. Sure, I can't even say that, can I?
Yeah. Lena, what do you think?
The sponsor.
I usually give high ratings, but like I said, this is not my favorite. I would give this a 6.4.
6.4. I like your style, Lena. I'm going 6.1. Way too much fruit. I can taste the alcohol. Anytime I can taste the alcohol, that's bad news for me. It just means it's too strong.
It's a sip of sunshine.
It's not a sip of sunshine. I could think of another word that you almost said, but I'm just going to leave it.
Anyways. You know what? Now they're not gonna. Lawson's is not gonna sponsor us anymore.
I know. It's okay. It's in the
okay.
The long list.
There's other sponsors.
There's a long list of people who will no longer sponsor us.
We're gonna run out of sponsors and we're gonna switch to Scotch, right?
Yeah, that's true. Actually, you know what? When we originally started doing this, I think the first time we ever did it, we decided we were gonna do Scotch. And I am not a Scotch drinker. I'm just a little bit of a lightweight, and I couldn't take it. And I said, no, we got to go to beer. And so we've been in beer. We'll have to do a Scotch one of these times.
Yes.
Oh, Lena's a big Scotch drinker by the sounds of it. I personally can't stand this stuff. It seems cool. I'm not deriding anyone who likes Scotch. I desperately wanted to like it. I'm just basically not cool enough to like it.
You just have to get a really good one, and it's like nice and sweet.
I tried that, Lena. I tried.
Have you tried rum?
No, so I hate rum even more.
Oh my God!
I don't drink rum.
Yeah, oh my God! Both of you have.
No,
you clearly have not had good stuff.
No, rum's terrible.
Oh my God! I love rum, but
I can't even smell rum and Coke.
No. Rum and Coke is awful. And especially if you use some of that cheap rum stuff. But like I'm talking about, you go get some sort of like a Barbados or some Jamaican proper rum that's like 15 years old, and you put it on the rocks. It's delicious. Delicious.
I'm just gonna conclude that you just like all kinds of alcohol.
Yeah. You know what? I love gin. I love it all. You're right. I'll drink. To be honest, I'm trying to think right now of something I hate. And
you'll drink any alcohol once.
I've had bad experiences with tequila. Yeah.
Oh, everybody's had bad experiences with tequila.
I tell my daughter who's at university, I say nothing good comes from shots. Nothing.
That's right.
Nothing good comes of shots.
That's true words of wisdom right there.
Somebody tells you we're going to do shots. Nothing good ever comes of that, especially when it's 2:30 in the morning.
Yeah.
But anyways, I should go. I better go. It's Patrick.
No, it was a good episode. It was a lot of fun.
Yeah,
and looking forward to it. So, and we're looking forward to the Market Huddle meetup. So this is the last time we're going to talk about it. So, but please, if you can make it out, please come out. It would be so awesome to see and meet all of our listeners. And look forward to those that can.
Patrick sounded a little desperate there. I'm not so desperate. I'll drink alone. If you guys don't want to come, don't come.
Oh, you know what? Remember Kevin, remember in Chicago you were like, oh, I took a picture with this gentleman, and you know what they say about standing next to someone really good looking.
Yeah.
Makes you look bad or whatever. It's like if you want a chance to look really great in your pictures, come and take a picture with Patrick and Kevin. That's how you guys should advertise it.
Oh my God.
I love it, Lena. That's a great slam. I think that's terrific. That was a really good slam. For those who are feeling down about themselves, come and have a picture with us. It really looks, you'll really look good. You'll think that, if you've been letting yourself slide and you're thinking you're not looking so good, just come by. Take a picture between two guys that are really let themselves slide.
Jesus Christ. All right. That's what we'll wrap it up.
Lena, no wonder you're a part of the huddle. You're a perfect huddler. Okay. Have a great weekend, everybody. We'll see you guys next week. I know you listen. Big week next week. We didn't tease it, but just big week. Big week. Make sure you tune in.
Oh, we didn't even mention the fact.
Yeah, don't say anything. Tune in, though, everybody. Okay. Have a great weekend, everyone. Bye-bye.